Hi there, you're with BQ Prime, and this is the fine print. The insurance industry is in the line of GST fire. Several major players, including HDFC Life and ICICI Prudential, has received demand notices from Director General of GST Intelligence. Both these major players have, in their exchange filings, said that the notices or demand notices pertain to period from July 2017 to July 2022. In fact, for the entire period that GST has been in effect. Now, HDFC Life has said that it got a demand notice of 942 crore rupees and it has deposited 250 crore of it under protest. It says that the matter relates to the claiming of input tax credit against supply of services. ICICI Prudential got a demand notice of 492 crore rupees, out of which it paid 190 crores without accepting any liability, also adding that it believes it has availed eligible input tax credit in compliance with the GST law. Now, to understand what's this industry-wide issue that has led to GST notices, I'm joined by Niren Shethia and Abhishek Rastogi. Niren, Abhishek, welcome to the fine print. Abhishek, I'll come to you first. What we can glean from the statements of the two largest players is that the issue relates to input tax credit. Could you sort of give us some understanding of what exactly do these show cause notices say? I'm not talking about any specific player, but generally, what seems to be the issue for the industry?
See, I think first of all, let's acknowledge that DGGI is one of the best investigating agencies. So, and this is not the issue, which is a simple issue, not only in terms of the numbers, but also in terms of the criticality and the type of players, which are involved. All of these are big insurance companies and listed companies and so on and so forth. So I think having said that, now let's understand what the issue is. The issue is with respect to eligibility of credits is what the show cause notice is saying. So which means that when these services are rendered to the recipient, are these fake services? Are these services only on paper? Or are these services which are being given so as to jump the regulations of the insurance provisions, which provides for basically some benchmarking in terms of the commission which can be paid? So the issue is prima facie on the ITC, which is the input tax credit. But of course, it will lead as a corollary to a lot of other implications as well. Because if it is fake in terms of the procurement of services, there will be income tax issues. There will be
Sure.
money laundering
We'll come
issues
to
as
that,
well.
Abhishek. Yes.
We'll come to that. So I think as far as the issue in these show cause notices is concerned, it is restricted to the eligibility of the input tax credit, which must be allowed or denied to these companies, because DGGI authority feels that these services in itself are fake. And hence, what we will have to see is, I think, predominantly two aspects, and Niren can add on, is one, whether there is a case of tax evasion. When we talk about the investigating authorities under GST, their role is limited. Please don't take me wrong, but their role will be limited to the aspect of whether there is a case of tax evasion. Now, assuming that there is a case of tax evasion, of
Abhishek,
course.
I'll come to that. I'll come to what aspects will be important because for the viewers at this point, it's important to understand what these notices are really about. And what I've gathered from industry players and talking to consultants who consult with these companies is that it has something to do, and Niren, please weigh in here on how some of these structures are sort of being implemented in the market. That as per the insurance regulator, the law requires you to pay only a certain percentage of commission, a certain percentage of the premium as commission, which is, I guess, 20%. But to enable sort of their agents, insurance agents, to sort of go out and sell insurance products even more, um, these some payments got structured as marketing expenses and advertising expenses. And that is what the GST department is raising an objection to. So if you could just with a simple example help us understand, I'm again caveating it by saying that we're not referring to any specific player in the market, but generally the industry practice.
Yeah, thanks. Okay. So, at the outset, it is incorrect to say that, you know, that they have tried to surpass the regulatory norms and paid something in the garb of something else. All of that is a claim. All of that is yet to be proved. And hence, what is the claim of the department, or what is the allegation that they have made? It seems they
No,
are
what I
trying
was
to
saying
say.
is that this is the allegation that the department has made in the show
Yeah,
cause notice.
correct,
That's
yeah,
what I was
exactly. So
referring.
I'm just clarifying that what is their allegation. Their allegation is that it seems insurance companies wanting to pay commission at a higher percentage, and they have paid a certain portion of it in addition to what was required. Yet to be proved, and documentary evidence needs to be presented for that. The So if you look at, assuming for the sake of discussion, as asking as an example, assuming an insurance policy sold for 1 lakh rupees, and the commission due to an agent is, for the sake of discussion, 20,000, uh, and but the because of market forces or whatever reason they want to pay more. So department's claim is that probably they used some intermediating entities or agencies who whom they made a payment for advertising and marketing, and they in turn paid it back to the insurance agent. So, for example, if the insurance agent, I need to pay him 30,000, uh, I paid him 20,000 directly, and 10,000 routed it through some intermediating agency. Now, all of this stands as an allegation right now, and everything obviously needs to be
Okay. Abhishek, are there sort of other structures? So one is this intermediary structure. Who are these intermediaries essentially to your mind, who could be providing these services? And of course, like both of you said, this is a fact specific sort of a case where each company will have to then show the documentation to the department. Uh, can you also weigh in on some of these structures that probably some of the industry players might be using?
See, I think these intermediaries, mostly to the best of my knowledge, are these portals where the advertisement, promotion of various kinds happen. So, the company which was supposed to receive 20 rupees, for example, from the insurance companies, got the additional benefit of, let's say, 10 more rupees through these agencies. The question is that whether there is an underlying service between this agency and the person who received the money. So most of this is also on the valuation. So what has happened is that, when this money has been routed or has come, it's not the case that there is absolutely no presence of services. There is some service which has happened. So maybe some kiosk must have been put, or some, online marketing may have happened. The name of one of the companies may have flashed somewhere. Then the question which comes is on the valuation. So I think in most of the cases, there is some element of service, but how much is the valuation for this service? DGGI is going into details of that, how to value that. Are these actual services? Are these real services? Are these sham transactions? How these are, contracted, and are these essential services, and so on and so forth.
Abhishek, I just want to go in. So at the top, look, there is an insurance company X, okay, and they have several insurance agents. Let's say A, B, C, D. In between this A, B, C, D, and X, you're saying there is also Y, which is probably an intermediary. Now, to the A, B, C, D, you're able to pay, let's say, out of 100, 20 rupees as commission as per the IRDA cap, right? Now, but you want to pay, let's say, 30. Now, is the insurance company in a contract with this intermediary, or the agent is in a contract with the intermediary, or it's a tri-party contract? What is happening
So
again at a
basically, it's a
general level?
tri-party agreement in all of these cases. Because see, what is happening actually is that the agent is supposed to get, let's say, 20 rupees, but instead of that 20, they all mutually agree that he will get 30 rupees. Now, as per the insurance regulatory provisions, he can get only 20 from the insurance companies. So 10 gets to him in his pocket through this intermediary Y in your example. So 20 comes from the insurance company, 10 comes from this company. So now what happens is, when this Y pays 10 rupees, it will of course not pay it from its own pocket, right? Y will have to recover this 10 plus some markup from insurance company. Now Y renders some service to insurance company because it has to recover 10 plus some markup to, give 10 rupees. So Y recovers with a markup, with an element of markup from the insurance company. Let's say that amount is 12, retains taxes, pays taxes, TDS, etc., and pays 10 rupees to the agent, which is ABC in your example. Now, ABC gets 20 rupees from insurance company, which is the revenue, also gets 10 rupees from Y. As far as agent is concerned, it has paid tax on 30. It is not the case of the revenue that the tax is not being paid on 30. Now, what happens is when it pays tax, there is an element of service, right? Now, service is to insurance company to the extent of 20, there is no problem. The dispute is with respect to 10 and the markup which happens. So, service first happens to Y to the extent of 10, and then from Y to the insurance companies to the extent of 12. So, the ITC in your example, which is under dispute, is on that 10 rupees and 12 rupees for the recipient, not for the output service provider.
Yeah, and these are typically services that the intermediary is providing by, let's say, advertising and marketing of the product of the insurance agency. Uh, Niren, what is the, let's say, what is the downside for the GST department here in terms of losing revenue? Because as Abhishek pointed out, that GST got paid, but are there players or these intermediaries in the market who didn't pay the tax and the insurance player went ahead and claimed input tax credit on it? Is that, are those are the kind of cases which the department is going after?
No, I don't think so. That's what the fact which prevails. As all the transactions are through banking channels, and I don't think so. It's a claim of the department that a particular intermediary or any particular broker or agent has not paid the relevant tax due to the government. Uh, Probably their case seems to be that he is not supplied or not provided a service and just issued an invoice. So it is service not supplied but issued only an invoice, and hence they are giving it a name of fake invoice. Uh,
Okay.
Questions arise: if there is no service, why there is a tax?
Yeah. Yeah. We'll
I
come to
have a
that.
slightly different response.
For
Allow me, please. So, to the best of my, interactions with a lot of agencies, I understand that how it got triggered was when one of the intermediary did not pay a substantial amount of tax. It got triggered from there. It is not the case where all of these intermediaries or few of these intermediaries did not comply. But I think how it got triggered in Meerut Jurisdictional Commissionerate is when one of the big intermediaries who was supposed to pay the output tax did not pay the output tax. There was an investigation, to recover tax from that, because suddenly there is a drop in the tax and crores of tax was to be paid, and hence it got started from Meerut Commissionerate, and then it got triggered to Mumbai Commissionerate when they found out that the issue could be slightly different in terms of not only the non-compliance but also with respect to these sham invoices.
Sure. So, Abhishek, there's one aspect there of the department questioning that, look, there was no service when this intermediary sort of got paid by the insurance player, and that money then got probably passed on to the insurance agents. That's one aspect. The second is of the valuation that you earlier alluded to. Can you expand on that a little bit?
Oh, I think valuation is very, very clear. Now, as an advocate, I may charge 50,000 rupees for a hearing to a client, or I may charge 5 lakh rupees hearing for a client. In few cases, believe me or not, I may have even charged 11 lakh rupees for a hearing to a client. Tomorrow, tax authorities cannot value my services. I don't think they will be able to make out a case on valuation. Now, what has happened in most of these cases also, if you talk about, the agents, it is not the case where there is no service at all. There have been real instances where evidence has been put on record in terms of training where these trainings are happening. So you have a banner at the back of the, training boardroom or wherever. There are kiosks which are standing, to market. There are websites which, are popping up your name. So there is an element of service. I don't see that it's a case where there is no element of service at all. So I think in terms of valuation, it will be very difficult for the tax authorities to make out a case, because even if the valuation is high, there is a tax payment on that. So I don't see that will be a great case for them to argue. Valuation of services will always be, tilted in favor of the service provider, because tax has been complied and paid on time. So I don't see valuation will be a big challenge for the industry.
Okay. Niren, tell me this, that, one of the conditions of claiming input tax credit, and in this case, it's the insurance players who are claiming it, is that a service has been provided. If no service has been provided, the law allows the department to disallow ITC to you, right? Now, uh, this is a situation where perhaps GST got paid, and against that is what these players claimed ITC for. I'm assuming that, let's say, and all of us can probably see that this is going to get litigated all the way to the Supreme Court, given that it's an industry-wide issue. Let's say the department prevails. What happens to that tax paid? I'm quite certain that that doesn't get refunded, and the players get denied ITC.
Yeah. So uh, there are two different causes of action you're speaking of. First of all, the condition is not provision of service. The condition is receipt of services, which means that the service recipient has received the service because he
Yeah.
is in the recipient. Now, there are two different causes of action. There's a one cause of action against the provider, and there's a different cause of action against the receiver. They are not going behind the receiver for the
Which is
tax
the
paid by the
intermediary in our
provider.
example.
Yes, you're right. So if at all there's a claim for refund, that claim for refund can be made only by the person who's provided or paid the tax.
Okay.
A recipient of tax cannot claim the thing. There is a technical argument and there's litigation on that also separately. But without going into the technicality right now, as a recipient, I'm not the one who's paid the tax to the government. On a contractual basis, I've paid it to the intermediary who's paid it to the government. So if after years of litigation, ultimately the matter gets decided, assuming for the sake of discussion in favor of the department, uh, one obviously limitation will hit against these intermediaries. One, and two is if at all, if they want, they can claim the refund, but not the insurance companies.
Okay, understood. Abhishek, like we discussed right at the beginning, right, that and you made that point that there might be consequences under income tax as well. Could you spell out for us what those income taxes are, again, with the assumption that the department's case prevails in the Supreme Court?
See, if you see the chain of the service with respect to this differential commission, which is being alleged, there is an element of service from the agent to the intermediary, and then there is some markup, and then the service from the intermediary to the insurance companies. So, intermediary, as the name suggests, act both as the service receiver and the service provider, right?
What is the
Now,
service that the agent is providing to the intermediary?
uh, what agent is providing to the intermediary could be some sort of promotion and marketing. Because see, at the end of the day, agent also gets the revenue of 10 rupees additional revenue. He gets that 10 rupees of additional revenue only when he renders some service, right?
Okay.
So in your old example of 20 plus 10 rupees, the 10 rupees is the disputed amount. So 10 gets billed from the agent to the intermediary, and intermediary bills after a markup of, let's say, 20%, 12 rupees to the insurance company. So
Okay.
the intermediary is acting both as the service recipient and the service provider. So when he gets into the shoes of the service provider, there will not be any problem because he's paying tax on the output side. When he gets into the, and as far as the agents are concerned, they are only rendering services on the output side. So at the most, there could be penalties on them. Now, when it comes to intermediary, they will have the role of both the service recipient and the service provider. As a service provider, there will be no issue. As the service recipient, what department is saying is that there is a sham invoice or a fake service which has happened. So what happens to that disallowance under income tax? Because what will happen is 148 capital A assessment under income tax will also start now for escape assessment. So one is with respect to the input tax credit under the GST law, because the authorities will say that to that extent, this ITC is ineligible. 148A assessment under income tax starts for escaping assessment or some bogus purchases. Now that income tax assessment, because both the parties are receiving the services, it is not only the intermediary, but also the insurance companies. Insurance companies to the extent of 12 rupees and intermediary to the extent of 10 rupees. There will be an income tax reassessment which may happen under 148, right, with 147 of the Income Tax Act. And now what will happen is, once the 148 capital A assessment starts, then the income tax authorities will be eligible to open the books of accounts, not only for this issue, for everything. Because that's what 148 of income tax, 148 of income tax says. And when it is reassessment under 147, the entire Pandora box opens for these financial years. So I think that is on the income tax side. Now coming on to the PMLA aspect. Now, what will also have to be seen whether there is any sort of laundering which has happened with respect to this transaction. When it comes to money laundering, this may not be a predicated offense under the Money Laundering Act. But if it can be proved by the authorities that the money laundering has happened in some way or the other, then or this money has been used or laundered, there could be implications under the PMLA Act as well. And we know when ED comes for PMLA, how draconian this could be. You will have to prove at every step that how this money has flown, whether money has been laundered, and whether it falls under the predicate offense. So I think there'll be more challenges under income tax and under the PMLA Act as well.
So rough road ahead clearly. Niren, I'll come to you for a quick sort of understanding on where the case sort of proceeds from here on. And like we said, that it's a fact-specific case for every player. What is the kind of documentation that these players will have to show to the department to convince them that these were not fake invoices, these were not sham transactions?
Yeah. So the road ahead from here is obviously once show cause gets issued, then it gets adjudicated by the adjudicating authority, and then the litigation starts in terms of order and further litigation. Uh, that's the litigation process. In terms of documentation, which is going to be critical, and what is also to be seen is how the volume of documents which you can present to the authorities.
So at this
Uh,
stage, is it that the department has asked these players for documentation? What is happening on ground right now?
Correct. So look, what happens is at this stage and at a subsequent stage, still is a fact-finding authority, and hence documents can be presented. During the process of investigation, documents were presented, probably marginally because of the time constraint. But now that they will have the time to prepare themselves, they will obviously put through or put in front of the authorities all these facts of papers and documents to prove that the receipt of service. It's going to be a situation of, if assuming the for example, we know for ICICI it is 931, and if they're going to able to produce documents for the sake of discussion of 931, then there is no demand which survives. So it is yet to be seen how this will unfold. One, in terms of documentation, because all of them will be now be preparing themselves for these documents. They are there now. We're speaking of the year 2017 onwards. Not that everything is available in my drawer. I can give and give it to you immediately. The process of collation will happen, and accordingly, all of this will be presented. There are many angles to the entire litigation in terms of not only one piece of documents, but many technical submissions which will come in, and it will corroborate with even what does the intermediary say, what does the insurance agent say, because it's quite likely that the authorities may go behind everybody. So all of this will have a bearing on the entire litigation.
All right, Niren, Abhishek, many thanks for shedding some light onto the fact that the industry is clearly sort of grappling with now its interactions with the GST department, and each of them will have to show or prove their case that their invoices were genuine, the transactions were bona fide, and that there is no case of denial of input tax credit. Of course, we'll stay on top of this story. Many thanks for joining us here on the Fine Print, and thank you so much for watching.
Thanks.
Thank you.
Have a great day.